The British pound has recently experienced 2 consecutive days of weakness against the US dollar. To be fair, on Monday the 7th, the decline was broad, with most currencies reacting to new tariff announcements from the Trump administration. This triggered a safe haven surge in the US dollar, driven by a general risk-off mood in the markets. But on Tuesday, the pound's weakness was more specific to the UK. It seemed to stem from a grim warning by the UK's Office for Budget Responsibility, the government's fiscal watchdog. Now, the OBR cautioned that risks to the fiscal outlook are mounting and that efforts to stabilize the UK's public finances have been only limited and temporary success. Despite this recent dip, the pound is still up approximately 12.5% against the dollar since its cycle lows in early January. This mirrors the euro's performance, reflecting extreme but perhaps exaggerated pessimism toward the eurozone at the year's start, paired with optimism for the US under the new administration. Both of those sentiments have moderated in recent months. Now, the next major event for this currency pair is the US CPI release on July 15th. If inflation comes in significantly above the expected 2.7% year over year, it could delay Federal Reserve rate cuts, further strengthening the dollar at the pound's expense. Now, the CME Group offers 3 different size currency contracts, the standard, the mini, and the micro, in order to match a trader up with their preferred risk tolerance. We're going to be using the micro in these examples. Now, if a trader believes that the British pound could go lower from here, they could express that by selling the September micro British pound futures contract at 1.3560 and targeting a move to the June lows of 1.3380. Now, a stop for this trade could be placed above at 1.3690. This trade can make $112.50 if the target is reached and risks $81.25 if you're stopped at your level. Now, if a trader believes that the British pound could move higher from here, they could buy the September micro British pound futures contract at 1.3560 and target a move to new highs of 1.3860. Now, a stop for this trade can be placed below at 1.3350. Now, this trade can make $187.50 if the target is reached and risks $131.25 if you're stopped out of your level.